Welcome to Cost of Goods Manufactured a different way with just the T accounts. I don't like to do the schedule very much in my classes because I don't think that that's what it's about. Let's just go through the T accounts that will help you do the journal entries. Okay, I have a problem here, exercise 8, and I've already made the 3 T accounts for inventory: raw material, work in process, and finished goods. And those are the 3 that are on the balance sheet in assets, and they have debit balances because they're assets. We're going to take cost and move them through from raw materials, then requisition them and start them in work in process, and then put them into finished goods when the goods themselves move into finished goods. And after that, it leaves the balance sheet and goes to the income statement. So let's get started. My beginning and ending inventories are already put on the paper. And we got those from last month, and then we will have those at the end of this month. So the things that increase raw materials in a manufacturing environment is purchasing more raw materials. So the problem says that raw material purchases are 132, and I'm going to put them as the debit side. Now we had a case where the raw material warehouse includes indirect materials and direct materials, which we know happens more than likely. The indirect materials would be credited out of raw materials and into manufacturing overhead. But we don't have that in this case because it says that in the problem. The direct materials then need to be debited to work in process and credited from raw materials to move them along. Now we can solve for this because we have 8 in the beginning inventory, 132 added, and then a 10 left over. So 140 minus 10, or 130. So 130 is going to be materials used. In this case, it's all direct materials, but it could be indirect. Direct materials used. And those would be credited out of raw materials and debited into work in process. So I'm going to put the 130 ready to start in work in process. Now those materials get converted into product by 2 costs: direct labor and manufacturing overhead. In this case, applied. We don't want to use the actual overhead because you can't trace it to actual products. So you never put the actual overhead in work in process. So I'm going to make sure I can add the direct labor that's going to be given in the problem and MOH applied that is also given in this problem. So the direct labor in this problem is 90. I'm going to add that in as a debit to work in process and a credit to some kind of salaries payable. Then MOH applied is 210, and that's going to be a debit to work in process and credit to this little account MOH, and it's a clearing account. So I'm going to put 210 here as a credit in this temporary account. It's MOH applied. So that entry is a debit to work in process and a credit to MOH. Now, MOH actually comes with some actual cost, doesn't it? We collect the cost of the rent, the indirect labor, supervisor, depreciation, indirect materials, which could be the grease on the machines, and all those get accumulated into MOH actual. In this case, it's $220,000. So the actual is 220, but the applied, which we got from doing the estimated predetermined overhead rate and multiply it times the actual driver, comes out to be only 210. Are we going to jail? No. We're going to clear this account out to the only place we can clear it out easily, to cost of goods sold, because that's what cost of goods sold is, an inventory cost that goes on the income statement. And the matching principle says we match it to the period when we had the expense. So in this case, I've got a balance of 10 in MOH. Well, I don't want to have any, so how would I get rid of a debit balance? Credit. So I'm going to credit. So this was the balance. I'm going to credit 10 to MOH, and I'm going to open up an account called cost of goods sold and clear out the 10 into cost of goods sold. The way I'm going to do that is if I need a credit in MOH, then I will use a debit in cost of goods sold, and that will clear out the MOH. And it flushes it into the income statement, and it's proper to do that. It's GAAP accounting. Remember, we're under GAAP accounting ultimately. In the finished goods, the only thing left to do is to put some into finished goods. Now, did we finish some? Yes, because we started with 5,000. We added all these costs, 130, 90, and 210, and we ended with 20 in work in process. So if we take all these debits and subtract the ending balance, then we've got a work in process of 415, and we call that cost of goods manufactured because they're completed and we're ready to move them into finished goods, just like the physical boxes or whatever they are being moved down the hall to the finished goods warehouse. So I'm going to credit work in process and debit finished goods, and I'll just put a little note that that's coming from the cost of goods manufactured of 415. Now I've got my finished goods ready to go, ready to be sold. If I had a 70 as the beginning inventory, an ending inventory of 25, and I had added 415, how much does that mean we sold from finished goods? 70 plus 415, which is 485, minus 25 would be 460. And that happens to be the cost of goods that are sold. That's a credit to finished goods, but a debit to what? Cost of goods sold expense. Ending the month with a cost of goods sold now, including the adjustment of 470 that would go right to the income statement. Isn't that simple? Do we need to do a schedule? No. Thanks.